Okay, folks, so in this video, we're going to walk through 5 stocks that I believe are in very, very good deal territory after recent drops in the wide market. With the market in Teasy McTeasy mode, my take is that one shouldn't focus so much on trying to predict the short to medium term trajectory, but rather focus on slowly snapping up stocks that are attached to businesses that they believe are fundamentally undervalued. Every time a bear market or a correction ends, people don't look back and say, damn it, I wish I had bought less dips. I wish I had bought less good companies at cheap prices. But when you're actually in a dip, people focus so much on timing the exact point of a reversal that they usually end up missing the reversal. There's so much time for the market to get back on track, and it doesn't need to recover tomorrow for it to make sense to buy good deals. So in this video, we'll walk you through some of my favorites right now. Make sure to hear out the arguments and then make your own conclusions. The goal is to give you ideas, but you do have to build conviction on your own or you're not going to play them correctly. Okay, first AMD. So ironically, AMD reported breakout earnings after the bell, which unfortunately screwed with the pricing for this video, but this is an incredibly important stock. For full context, AMD is a stock that we've had on our ZipTrader U price target list through the 70s panic, and during the second half of the year, it really sparkled, going as high as $164. However, as of late, it's been on a decline. It hit back down as low as $114 just recently, and while it's testing that 180-day directional SMA, the bigger context deal is looking very, very juicy. So why did AMD do so well towards the later half of 2021? Well, the semiconductor space is an industry that has way more demand than they have supply. AMD also has gained a huge market share from competitor Intel and delivered earnings beats over and over again, compounding growth rates easily beat out their competitors. Their acquisition of Xilinx, which I still can't figure out how to pronounce, is expected to be completed this quarter, and AMD themselves said during the time of acquisition that this would help them expand their rapidly growing data center business and be immediately accretive to AMD margins, earnings per share, and cash flow generation. So I see all of these things as very, very strong short to medium term tailwinds for AMD stock. In terms of the earnings report that came out in the after hours, it reported record revenue, 68% growth from 2020, a gross margin of 48%, significant growth in profitability, and operating cash flow up 229% year over year, while analysts continue to think that gas station stocks are the future and tech stocks are garbage and should be thrown away. I continue to hold the opposite opinion. With AMD, you're getting a trailblazer in the niche. And unfortunately, a lot of people agree with me because it pushed up very far in the after hours. But if you are a ZipTrader U member, AMD is likely going to be one of the first price target upgrades that we're going to have in 2022. And that's saying a lot because quite frankly, it's been pretty hard to upgrade anything these days. So make sure to check the morning briefings because that's where we do put our price target upgrades and then they go on the list. Next, NNDM, Nano Dimension. So NNDM is a super small cap 3D printing stock on the venture capital side of the market. It's probably the most risk on aggressive position on this list, and in a market that hates risk on and hates venture capital and hates anything that looks like the future, well, it's been performing like a dumpster fire over the last 11 months. I've actually been pretty shocked at how bad it's performed. I know that venture capital stocks will have extremely high beta, but how far this has dropped has been really shocking. I mean, this is just unchecked dysphoria. We talked a little bit about this a couple weeks ago, but I've read a lot of comments saying, oh, NNDM is this trash meme stock that has no real value. And Cathie Wood bought it, so it must be garbage. You have people speculating that this company is going to go bankrupt because the stock is down so much. Really uninformed and stupid opinions. The units are in thousands, but NNDM reported $1.1 billion in cash and cash equivalents and over $1.52 billion in total current assets. Meanwhile, what is the stock trading at even after its slight bounce? Well, $938 million. The company has enough money on their balance sheet to go and buy up their entire market cap. They're trading below their net asset value. Even analysts that are super bearish on anything that looks like growth tech, they will at least value it at the net asset value the company would have if somebody bought it and gutted it. What's hard to value in a company is the intellectual property, the business strategy, the leadership, and the future growth prospects. What's not hard to value is how much cash you have and what that cash is worth. If you have cash and cash equivalents and some property worth $1.5 billion, well, that's worth $1.5 billion regardless of what your company's business strategy is. Unless your liabilities or your cash burn cancel that out, but in NNDM, that's certainly not the case. You have unchecked euphoria of short sellers and sellers of growth stocks. And NNDM is one of the best examples of that. a stock that literally is trading below what it holds. But also a company that as of January 31st reported approximate revenue increases for the fourth quarter of 255% over Q4 of 2020 and 420% over Q3 of 2021, 194% over the full year of 2020. And the company has stated that within the foreseeable future, they'll be doing synergetic mergers and acquisitions and accelerated research and development. The insane amount of capital on their balance sheet allows them to do this, despite short sellers and sellers of these shares thinking that, oh, this is going to go bankrupt because everything in the growth tech sector is going down. No, these companies actually don't really need the stocks to go up. They just need it for capital raising purposes. The NNDM has a ton of money on its balance sheet. They'll be able to accomplish what they need to do. It'll take them some time. Things scale up slowly. But in this market condition, it's very, very clear to me that people have overbeat down the stock. Next, Upstart. So this is a next-gen lending company that I like quite a lot. On March 29th, 2021, we added Upstart to our ZipTrader U price target list, which was during the fear sell-off at that time. That sold it to $80 before bouncing to an insane high at $400. Now, during the uptrend, it violently passed our price targets, and while we did upgrade it on better than expected results, it kept running insanely as hedge funds were playing off the momentum and baiting people to buy it, and that just kept happening over and over again. Coincidentally, when institutional money started playing it to the long side, you saw the financial media start pumping out articles of, oh, this is a huge buy at 300, 350, 400. We hated it below 200, but we love it now that it's above 300 and it's going up. But during that time period, if you go back to our videos, we said, hey, this is overvalued. This can go as far as they want to push it up. But at the end of the day, Upstart is factoring in way too much growth. You can let it run if you want, but fundamentally, it doesn't make sense anymore. You factored in too much growth. Well, it turns out that analysis was right, but now we're on the completely opposite side of the spectrum. You've gone from factoring in way too much growth to now factoring in a big bludgeon, which also doesn't make much sense. It's very, very overly beat down. It's now overly beat down below the fundamental value. Upstart, in my view, is one of the most exciting companies right now, although you wouldn't know it by looking at the chart. Upstart is a company that is profitable and experiencing triple-digit revenue and earnings growth. Once Upstart scales over the upcoming years, their margins are going to get bigger and bigger. Over the long run, this is a company that analysts aggregated by Seeking Alpha believe is going to continue experiencing 30 to 40% year-over-year revenue growth for the upcoming quarters through the end of 2023, which is, of course, far above the market average, while also having a gross profit margin at 85% that is well above the sector margin at 63%, and I believe that number is going to go up even more. Upstart also believes that there are significant growth opportunities to apply their lending technology to additional segments of credit cards, mortgages, student loans, small business loans, and especially in the auto loan segment that they've been rapidly investing in. Upstart, though, is a growth company, and it is reporting earnings on February 15th, so we will want to make sure that we're checking in on them to see if they deserve more conviction or less conviction, but I am optimistic. Okay, fourth, I have an increasing infatuation with Coinbase. I've been a bit squeamish about retail brokers as a whole after we saw what happened with Robinhood, how quickly it fell as investors have really struggled to comprehend the cyclical nature of trading activity, and of course the increasing competition in retail brokers. But when you see how far Coinbase has already dropped 50% down from highs, when you see the reputation it has in the sector, how much other competitor brokers like FTX are being valued at despite being in a huge slowdown of crypto trading and crypto bear market as a whole, well, it makes me think that Coinbase may actually be one of the biggest hidden gems right now. It's relatively easy if you're a broker to gain the trust of people in the stock space. Regulations are tough, oversight is tough, penalties are huge if you do something wrong, there's different levels of insurance. People tend to be very trusting of stock broker platforms, even if they're new entrants. But when it comes to the crypto space, it's a lot tougher to get that trust. It's a newer market, there's a lot more shadiness, and there's substantially less regulation. I mean, technically and legally, they aren't even really brokers, they are simply exchange platforms, which has allowed for a completely different relationship with regulators and an even bigger need for trust and reputation. I'll keep calling them brokers, though, to make sure you're paying attention. People will flock to the crypto brokers that have the best reputation, and Coinbase is one of the first ones that come to mind. It'll take a big crypto rebound and a big change in crypto trading activity for Coinbase to have a strong reversal. But at the price that we're looking at right now, for a long-term value, Coinbase under $200 is a steal. Lastly, as a fifth and a bonus, I'm starting to like Lucid's pricing again. We've covered this since last January when it was just under $15 a share and in its SPAC stage. That was actually before it was even confirmed that they were going to be merging with that SPAC. Then went up to $64, then it dumped down to $16, and then it went in November back up to just over $60 again, and it's been quite a wild ride. But this time around, I've been very quiet because we've been letting the multiple crunch drama play out, but once again, we're in that range where it's getting very juicy. I'd like to see how their deliveries play out, and investors right now, we know, do not have any patience for a company to have a bad month or a bad quarter. If they miss one delivery number, all of a sudden they're like, okay, yeah, this is garbage, sell it, buy back in when the company has fixed all their problems, and then of course, when it's at a much higher price. I think the second this misses on deliveries, you're going to see a nice beat down to 25, even 20. And I think that might be one of the last opportunities you'll have to get Lucid in the $25, $20 range. Lucid is very, very interesting because they already have shown they have the ability to create a competitive vehicle both in performance and battery technology. They've also shown that they can get demand. And nobody wants to say this, but the odds of them going bankrupt are very, very low. Not only do they have substantial capital backing in this market, but more importantly, that original capital backing from the Saudi Sovereign Wealth Fund. To make an analogy, Lucid is sort of a smart prince that's going off into business. If the business needs capital, they can go right back to that Saudi investment fund. And let me tell you, the Saudis can be very, very hands-on and aggressive in making sure their investments pan out. These are all reasons that US investors have been very, very willing to invest in Lucid because they know at the end of the day when push comes to shove, this is going to be pushed through. But anyways, folks, that concludes the list. I know what you're thinking. Why did you not talk about SoFi, PLTR, ChargePoint? Those are all excellent companies that are very, very oversold right now, but we talk about them all the damn time. I'm a big believer, especially in growth tech, of not putting all your eggs in one basket, but instead spreading them out into many baskets that you have conviction in. Not too many where you can't follow the damn companies, but enough where you can play the cycles. However, if you do want access to our full conviction list and price targets, as well as our daily morning briefings, and of course our step-by-step lessons in ZipTrader U, well, you can go ahead and check out that link below. Coupon code Battlefield2022 will get you a nice discount, $80 off, and you will also have lifetime access to the program and all future updates. Anyways, folks, that caps off today's video. Have a good day, and I'll see you in the next video.